America turns 250 years old this July 4th. 2.5 centuries of history, democracy, and if you work in this industry, accounting. And while you probably know the big names and the big scandals, I want to take a few minutes to celebrate 5 moments that people in the profession may have not heard of. These are the ones that quietly shaped everything that we do today. So let's go. America's accounting profession was founded by the British. In 1887, a group of accountants in New York formed the American Association of Public Accountants, the organization that would eventually become the AICPA. The twist? Most of the founders were Scottish and English, chartered accountants who had recently immigrated to the United States. The country that threw off the British rule in 1776 spent the next century letting British professionals build its accounting infrastructure. There's a joke in there somewhere. The CPA designation was invented by New York, and the first person to ever hold it never took the exam. On April 17, 1896, New York became the first state in the country to legally recognize the title Certified Public Accountant. The first CPA exam was administered that December in Buffalo and New York City. But here's the part nobody talks about. CPA license number 1, the very first CPA in America, went to a man named Frank Broker, and he didn't even pass the exam. He was grandfathered in based on his prior experience. The most prestigious credential in accounting started with an exception. Classic. Lawyers didn't want to do taxes, so accountants took over. When the Revenue Act of 1913 created the modern federal income tax, somebody had to do the returns. Lawyers at the time largely considered it beneath them, clerical work and not legal work. Accountants stepped in, and they never gave it back. In 1941, CPAs made up 1/3 of all practitioners authorized to appear before the Treasury Department. The Treasury itself employed 4,400 accountants and only 400 attorneys. One profession's reluctance handed another profession one of its most important revenue streams for the next 100 years. Before 1934, GAAP didn't exist. When the Securities Exchange Act was signed into law in 1934, following the crash of 1929, it required public companies to submit financial statements audited by independent accountants. That sounds basic, but here's what it replaced. Nothing. Before the SEC, there was no generally accepted accounting principles. Every company presented financial information however it wanted. Comparability across companies was essentially impossible. The crash didn't just reshape Wall Street, it forced the accounting profession to build the conceptual framework that underpins everything we do today. For over a century, the accounting profession regulated itself. Then, Enron happened. Before 2002, the accounting profession, including auditing of public companies, was largely self-governed. No external oversight. Firms set their own standards and policed their own work. Then Enron collapsed. Then WorldCom. And Congress passed the Sarbanes-Oxley Act 99-0 in the Senate. That's not a typo, 99-0. SOX created the PCAOB, ending more than 100 years of self-regulation. Within a decade, 44 other countries built their own audit regulators modeled after it. One of the most bipartisan votes in the modern Senate history, all over an accounting bill. 250 years, 5 moments most people missed. The profession didn't get here by accident. It got here through immigration, improvisation, political necessity, and a few spectacular disasters. That's a pretty American story, actually. If you want to talk about where the profession goes from here and how CPAClub can help your firm stay ahead of what's coming, reach out. We'd love to be a part of the next 250 years. Happy birthday, America.